Something unusual is happening. Quietly, and almost no one is talking about it. Over the past few years, China has been buying gold at a pace the world hasn't seen in decades. Not small amounts, not symbolic reserves, but massive strategic accumulation. At the same time, global tensions are rising. Currencies are shifting, and trust in the financial system is starting to crack. So here's the real question. Why is China preparing for something using gold? Is this just smart economic planning? Or is it a warning sign of a much bigger change coming to the global financial system? Because if history has taught us anything, when powerful nations start hoarding gold, something big is about to happen. And what China is doing right now could change the future of money itself. To understand what's happening, we need to go back to something very simple. Gold. For thousands of years, gold has been the ultimate store of value. Empires rose and fell, currencies came and went, but gold remained. Even today, central banks around the world still hold gold as a backup, a safety net when things go wrong. But here's where it gets interesting. In recent years, China's central bank has been quietly increasing its gold reserves, not through loud announcements, not with global headlines, but through consistent, steady purchases, month after month, year after year. And it's not just China. Other countries are also increasing their gold reserves, but China stands out because of the scale, the timing, and the strategy. So the real question becomes, what does China know that others don't? Let's rewind a bit. For decades, the global financial system has been dominated by one thing, the US dollar. Most international trade, oil transactions, global reserves. Everything revolves around the dollar. This gives the United States enormous power. But over time, cracks have started to appear. Sanctions, trade wars, currency manipulation accusations. Countries began to realize something uncomfortable. If your economy depends on the dollar, you are also vulnerable to it. And China noticed this early. As the world's second-largest economy, China relies heavily on global trade. But relying on the dollar also means relying on a system it doesn't fully control. So slowly, strategically, China began reducing that dependency. First through trade agreements in local currencies, then through building alternative financial systems, and now through gold, because gold doesn't depend on any country. It doesn't require trust in another government, it's neutral. And that's exactly what makes it powerful. But this wasn't just about safety. It was about positioning, because what China is building might not just protect its economy, it might challenge the entire global system. To truly understand this move, we need to connect a few hidden dots. First, economic uncertainty. The global economy has been under pressure, rising debt, inflation concerns, unstable markets. When uncertainty increases, central banks turn to gold. Why? Because gold holds value when currencies don't. Now second, geopolitical tension. The relationship between China and the West, especially the United States, has become increasingly strained. Trade restrictions, technology bans, political conflicts. In extreme situations, financial systems can become weapons, assets can be frozen, transactions can be blocked, and that's a risk China cannot ignore. So gold becomes more than just an asset, it becomes insurance. Now third and most important, the future of money. China is not just stockpiling gold randomly. It is simultaneously working on new financial systems, digital currencies, alternative payment networks. Imagine this for a second, a future where international trade doesn't rely on the dollar, where countries can settle transactions using a mix of digital currency backed by real assets like gold. That changes everything, because the current system is built on trust in the dollar. But a new system could be built on something else entirely, trust in tangible value. And gold fits perfectly into that vision. But here's the twist. If this transition happens too quickly, it could shake the entire global economy. Now here's where things get serious. In the past, gold accumulation by countries was slow, predictable, almost boring. But recently, something changed. Central banks, especially in emerging economies, have accelerated their gold purchases. And China is leading that movement. At the same time, discussions about reducing reliance on the US dollar are becoming louder. New alliances are forming. Trade agreements are shifting. And suddenly, what once seemed impossible is now being openly discussed. A world where the dollar is no longer dominant. If that happens, global markets would react. Currencies would fluctuate, power would shift, and countries that prepared early would have the advantage. Which brings us back to China, because what looks like simple gold buying might actually be preparation for a financial transformation. So what does all of this mean for the rest of the world? First, currency stability. If confidence in major currencies drops, exchange rates could become volatile. That affects everything from imports to savings. Second, global trade. A shift away from the dollar could reshape how countries do business. New systems, new rules, new power structures. Third, everyday people. Inflation, job markets, cost of living. These big changes don't stay at the top. They trickle down. And finally, global balance of power. Money is not just economic, it's political. And if the foundation of the global financial system changes, so does global influence. So what happens next? There are a few possible paths. Scenario 1. Slow transition, the dollar remains dominant, but alternative systems grow alongside it. Gold continues to rise quietly. Scenario 2. Dual system world, two financial systems emerge, one centered around the dollar, another around new alliances. Countries choose sides. Scenario 3. Sudden shift, a major crisis triggers a rapid loss of confidence in traditional systems. Gold and alternative currencies surge. Right now, no one knows which path we'll take. But one thing is clear, China is preparing for all of them. So the next time you hear about gold, don't think of it as just a shiny metal. Think of it as a signal. A signal that something deeper is changing beneath the surface of the global economy. Because when a country like China starts stockpiling gold at this scale, it's not reacting to the present, it's preparing for the future. And the real question is, are we